My friends, what is going on? Welcome back to the channel. So I put out on Twitter that if we got 300 likes, I would upload a video on my view on Tesla and what I'm looking for going forward. So we'll take a quick look at the good, bad, and the ugly of it. You guys know the deal when it comes to my videos. Nothing I'm giving you is financial advice. I just want you to make great trades for yourself, your family, and your portfolio. Please like and subscribe, all that good stuff. If you haven't done so already, you can follow me on Twitter, Colin_Gladman. I have one Twitter account. I know I get a lot of bots, but I have one Twitter account. So please verify. It's one of the blue check mark accounts and all that kind of stuff. So just make sure you're talking to me. I will never DM you about, crypto or your trading or anything along those lines. So I have one Twitter account. I have one Discord. On Friday, I will be posting the link to join the Discord, and we're doing 50% off of your first month to join the Discord as Black Friday, Black Month, whatever. So I hope this video finds you well. I want to go through Tesla. We'll look, like I said, at the good, bad, and the ugly of it. What are our potential upside targets? What are our potential downside targets and invalidation, things of that nature. So those of you that follow me back in the summer, remember that I had a very good summer, made over 7 figures trading Tesla. What I traded was basically this run up from January, then you had consolidation and this nice bull flag, and then you got the push up after that. And pretty much that's exactly what we are getting again. Now, does that mean we're going to get the exact same result and Tesla's just going to come flying out of this? No. But does it mean it's an A+ setup? Absolutely. So, and that's what I do. I trade A+ setups. I use my technical analysis between, patterns, supply and demand, volume, indicators. When I teach technical analysis, the way that I view the market, I always talk about how everything's a little piece of the puzzle. No one thing is, matters way more than others. It's just, it's not just, I got to just look at option flow, or I just got to look at supply and demand, or I just look at price action. It's all those different pieces. You're putting together the puzzle, right? And then once, you start putting that puzzle together and the picture becomes clearer, then that's when you make your trades based off of that information. Sometimes you'll be wrong, sometimes you'll be right. However, if you take great setups, you are going to be way more right than you are wrong. And at the end of the day, that's the name of the game, right? So in this run up to January, we had a nice consolidation, then we had the breakout. Now we're pretty much getting the exact same thing. I was just pointing out to my Discord team kind of the eerie similarities, if you will. I didn't even realize. So back over in here, this is when Tesla was doing its inverse head and shoulder setup. This is where I originally entered into all of my calls, which if I get in here on a little bit lower time frame, you can clearly see here that, and this is what I was, trading and posting on Twitter. Tesla basically came down here and, come on, where's my little brush tool? So basically came down here, kind of gave us this nice little inverse head and shoulder setup. You got the break of the neckline, you got the retest, and then you went at that point. This is on the hourly chart that we're looking at right here. What I was just pointing out to my team was that just like back over in here, you had this false breakdown, and then you really started to move. Look at what's happening here. Here, getting that false breakdown. Now we've been starting to move. And also, let's go in here to the hourly time frame. What do we have again? We have a nice little inverse head and shoulder setup. Now we're catching the breakaway gap. So what could happen here? Well, there's lots of things that can happen, of course. One of those is going to be accumulation. Back in here, I was telling the team, don't stress out too much. You basically ping-ponged around in here from like 166 to 177 before you caught the energy and built up that for the next move. So you had your breakout, reaccumulate, and then you catch your move. So we could break out. I think a very likely thing that I talked about with my team is up to about 242 or so, kind of that 242 to around the 230 range. That could be the new sort of reaccumulation before a potential breakout to the upside. Now, what I was looking for here was I was looking for a potential retest. So we had the gap up today, started out the day a little red, was looking for a retest right around that 226. However, this kind of post-earnings gap down that we had, you can see here it came down, retested that. This gap was defended. So Anybody who's followed me for a long period of time know, I talk about gaps a lot and how 80% of them wind up getting filled, and they do, but there's nothing more bullish than failed bearish moves, right? So we pushed down here, and I was hoping it was going to come down to 226. That's where I was going to grab a whole bunch of calls. But once I saw this gap getting defended, it's when bulls are not going to let that gap happen, that gap fill happen, at least not right away. So if that would have, in a perfect world, we'd have come down here to like 226 and then get a nice response, right? So that's what I was looking for, was open here, come down to around that 226, and then continue to start to curl out. But even a stronger move is it defended this gap area, and now we're starting to march all the way up and through. So I do think Tesla can potentially get as high all the way up to like the 243 area. If we go out here from a daily perspective, so that's going to be spot number one that you're going to be looking for to hold, is can Tesla hold this 230? The next level down is going to be that sort of top of that inverse head and shoulders that I was talking about right here, which is going to be that 226 range. You're also getting what you want to see in this inverse head and shoulders. So once you start to get the breakout on that right shoulder, you want to see that volume curling in, and that's exactly what you're getting here on Tesla. Now some stopping points, some roadblocks, along the way is going to be right here, like right at the gap down. So when you look at this, Tesla kind of has this volume gap right here. What this is called is called visible range, which basically is just taking the volume that's down here and putting it up here. Volume by price is another way to look at it. Anytime you have these like bigger volume gap areas, and you can see here where Tesla is right now, is there's not a lot of range that's been traded in this corrective, in my opinion, accumulation style pattern. So Tesla can slice through that. So you get up here, you start running into these bigger volume shelves up here around that 245 range. You've also got another layer or level of confluence of, you've got the 50-day moving average. So this 50-day moving average, you can see it's both acted as support and resistance. So, you would think that the first time you come up here and you test this 50-day moving average, you might catch some rejection at here, and it's also chilling right here at the gap down area. So that's kind of why I was saying kind of that 240 to 243. That might be our rejection point to come down here, consolidate a little bit, build up that energy to then catch the break. So overall, we want to see this type of move. Once again, going back to a very similar thing to what we saw back over in here, where you could see once you got above that 50-day moving average and you tested it and you used it as support, then the next time you came and touched it, created a hammer candle off of it, then it was pretty much off to the races at that point in time. So this move could overshoot. We could shoot straight all the way up to the top line trend line, which is going to be around the 253. Then you come back, show the 50-day use as support, then you get your move up at that point in time. So it really depends on how strong the market stays. We've basically gone straight up on SPY and QQQ. I think QQQ has a easier path forward to reaching its all-time highs. I think both SPY and QQQ are potentially going to see their all-time highs this year. That's my personal opinion on the deal. Like I put out on my Twitter, bulls are still in disbelief and bears are in complete denial. This is overextended. No way it keeps going up, right? Love it when they think that. So continue push up. Really aggressive this week would be getting up into the 250s. But between your top line resistance plus these three daily tops over here, I would be surprised if we just kept blasting through that. Tesla on its RSI on its daily has plenty of room to run. Just crossed over, I believe, 50 today. So once you're crossing over that 50, there's a lot of positive momentum in the stock right now. Also, MACD recently crossed up. It actually crossed up back over in here. So both the MACD and the RSI, which once again, those are things that I kind of take as a grain of salt. Do they matter? Yes. But when a stock is squeezing, there's things you can kind of throw out the window. And in my opinion, that's exactly what's going on here with Tesla. So potentially a roadblock here around that 240 to 243. But so I also think you can reach high side up to the 250s. If we go back down here from an hourly basis, if we use kind of some fib extensions, which anybody who's followed me for any amount of time knows I'm real big on using fibs. So if we go from our swing low to our swing high, which is basically like a little double top here, back to our most recent swing low. This is what I pointed out at the team. Wasn't surprised at all. So the one extension of this move takes us up here to the 238, which is where we got kicked off today. But an overextension would be up here towards the 1.618. I really think like that would be tops of the market. Is that 250 to 260 is really going to be. I would be surprised. I'm all for it if we get above that. So downside targets, if for Tesla to remain super bullish, you really want 230 to hold. The next target down is going to be 226. You start losing 226, I'm not going to be liking it near as much. Now this would be if you start getting daily closes. So sometimes people, the first 5-minute candle that goes below 226, they would start freaking out or whatever. I would want to see where does the close happen, 4-hour daily close, because there's lots of times they're going to come in, they're going to sweep that buy side or sell side liquidity, which means they're going to come in here because this is a very logical place. The two most logical places to have stops right now are going to be around 230 and 226. So what happens is you see these market makers, they come in, they sweep all that, they trigger all these stops, and then they come here and then it immediately just reverses and whipsaws right back out. So watch your volume, watch your price action. A perfect example of it, I tweeted about several times, is NVIDIA. Everybody was talking about this head and shoulders pattern right here. Soon as it breaks 400, all of these people who had stops right in here, all these people get stopped out, and then it immediately reverses, and now it's chilling up at 500. And all these people who got stopped out, whether it be shares or contracts, are just going, dude. And it just kept on running because everybody was like, oh, the head and shoulders. Like I said, I tweeted out. I was like, oh, everybody's talking about the head and shoulders. That means see at 440 to 460. I mean, this move even overshot. So like I said, this is a perfect example of a move can overshoot. Another thing that I'm big on with Tesla, which I'm going to go to the weekly chart to show you this, is fair value gaps. Let me clean this out here so you guys can see just a little bit easier. So this weekly fair value gap, basically that 237 mark that I just talked about, is what's called the consequent encroachment, which that's just a fancy way of saying the 50% line. Once you get a close above that consequent encroachment, that is going to be bullish. Now what we want to see is basically 235 act as support. So I'll get in here on a daily basis. So like I said, this grayed out area is the weekly fair value gap, but you got to close above. And if I get down in here, even in the 15-minute time frame, you can just see how important these key levels are. So right off the rip this morning, you came up here, you rejected it. Look how many rejections you got off of it on a 15-minute time frame. So this just goes to show you how you got to know all these different levels and how important they are to a stock. And then once you got above it, so like I said, a perfect bullish scenario would be even a little test of that 235, and then you start showing this area as support, and then you can really be cooking with gasoline. But I think Tesla's already I think up in the 240s. And after hours, yeah, it's almost at 241 right now as I'm making this video. So, and this is another sign. I was just telling my team, when the bears are in full control, so Tesla's one of those stocks where you just have perma bulls and perma bears. You either absolutely love Tesla stock or you absolutely hate it. And when the perma bears are in control, that's when you typically see those consistent overnight gap downs that are happen over and over and over again. So like when Tesla, I'll be honest, I shorted a lot too. No reason to not. Obviously my shares are all long term, but when the bears are fully in control, you just start seeing look at all these little gap downs that are happening in here. So you get those $3 and $4 gap downs when bulls are in control, then you start catching those like $3 to $4 gap ups. And Tesla's been heavily shorted. You got a beautiful inverse head and shoulder pattern that's happening right here, just like you had back in here in April. And this one, if anything, it's just only bigger at this point in time. So it's not just going to go straight up. If you full port calls, you're an idiot and you deserve to lose money. but there is a lot of potential upside left in this play. As far as, you'd love to see, and I'm already in calls, full disclosure. So, I would really love to see, in a perfect world, a move that, basically kind of takes us straight to this top line around that 250. And then we would get, some type of kickoff. Then we'd want to show like this gap as support. And then you start to catch your breakout at that point in time. That would be, sort of the most bullish thing in my opinion. But going forward, you really want to see this sort of 235 level hold. And you can see how important it was, right back in here. This was the floor right back in here before Tesla then turned right around and shot right back up, another 30, 40 points. So it showed as support, then it acted as resistance when we came back. Now we want to see that start to act as support. But, this thing really is set up for a very nice gamma squeeze overall. And last but not least, for the main event of the evening, we'll just kind of look at some price targets. So this move right here, overextended, but I called this move from and it's, nothing like, oh, Colin's brain's so big. No, it's just technical analysis, man. I called this move when I entered my calls in here. I exited up here at the 260. We got the pullback, so it overshot just a little bit. I'll get in here a little bit closer. So we overshot a little bit, then came in here, and then got the extension. So doing quite literally the exact same thing. There is zero reason to believe that this one at least can't play out to a one extension of around 340 to 350, which still wouldn't even be taking Tesla back to its all-time highs. 310 is definitely, this is going to be this was a huge triple top, made a ton of money shorting Tesla right here off this triple top, and you can see that's a 786. So there will be some stickiness back over in there. And like I said, it's not just going to go straight up, but this overall, from a macro perspective, I won't be surprised at all if, we're looking back, even like March-ish or so, and Tesla, they got a lot of good catalysts coming. You can argue, feel free to be the perma bear. But what I always say, volume don't lie, man, right? This thing, when it got hammered down here, this volume, this has all been strong accumulation, in my opinion. I think Tesla hasn't seen its all-time highs or even close, but that's my personal opinion, okay? And I'll short it too, okay? All right. Hope this video was helpful to you. Like, subscribe, all that kind of stuff. So, like I said, definitely want to hold that 230. 226 would be next. If that does not hold, then we're going to have to start looking at potential invalidation at that point in time. But, like I said, overall the move is very good. 240, like I said, could provide some stickiness. I could see it going as high as 250, but like I said, when a stock is squeezing and it's OPEX week, there's a lot more contracts that are potentially out there. So between it being OPEX week, December's a massive chain, and so is January. So there's just a lot of potential upside here, in my opinion. All right. Much love. I'll see you in the next video. Make smart decisions. If you're a dude, trade like your wife is standing over your shoulder. If you're a chick, trade like if you're a lady, trade like your husband's standing over your shoulder. Just make good decisions, right? Don't over leverage yourself. You should never put money out there, especially if you're buying options, not necessarily shares, in my opinion, but if you are buying options, it should never be with more money than you are okay losing. All right. Follow me on Twitter. Look out for the Discord link posted on Friday. Limited spots will be available. 50% off your first month. Have a good one. I'll see you later. If I can hit stop.